Welcome back to Explain the Charts. Today, June 5th, 2025, we're analyzing USDJPY, blending news analysis with technical chart reading. We'll identify trends, support/resistance levels, and key price points to help inform your trading decisions. First, let's consider recent news events. The U.S. Treasury Department recently stated that no major U.S. trading partners manipulated their currencies. Bank of America continues to hold a bearish stance on the U.S. dollar. Asian economies are showing marginal improvement due to easing U.S.-China trade tensions. Now, let's transition to the charts and see how these events may be reflected in the price action. Looking at the one-day chart, we see a period of volatility, with recent price action suggesting a potential area of consolidation around the 155 to 157 level. Significant support seems to form around the 142 level, which acted as a lower bound several times in the past months. Resistance seems to form around 162, the high from July 2024. Given the bearish sentiment on the dollar, a potential downside break below 155 is possible, perhaps down to that 142 support level. However, a bounce off of the 155 level could signal continued consolidation in the short term. Let's narrow our focus to the past few weeks and see if we can get a better picture from May 16, 2025 onwards. Focusing on the period from May 16 onward, the daily candles reveal a choppy pattern with no clear trend emerging. The latest candle shows a close near 156. This could be an important level for short-term trading. If we switch to the 1-hour chart, we can see a clearer picture for short-term trends. Looking at the 1-hour chart, we can see more granular price action. Since June 1st, the price action has been largely range-bound between 142.3 and 144.3. The price is currently trading near the middle of that range. A breakout from either side of this range may show whether we're moving bullish or bearish in the short term. Let's examine that range-bound action more closely. Switching to the 15-minute chart, we can see that the range of those candlesticks are very small, so there's not much volatility and it's difficult to make high-confidence assessments. The prices do seem to be tightly contained. A break below 142.3, for example, could signal bearish sentiment, while a breakthrough of 144.3 could indicate bullish short-term action. For now, it seems we're in a tight consolidation pattern. In summary, key price levels to watch include the 155 support on the daily chart and the 142.3/144.3 range on the shorter timeframes. A decisive break of these levels, reinforced by news events, such as further bearish dollar reports or positive U.S. data, would increase the likelihood of downward or upward price movement. As always, trade with caution and consider all market information when making your decisions. Thanks for watching Explain the Charts.